Stop scrolling. Bitcoin might be about to crash to $107,000, and most traders have no idea it's coming. I'm not talking about some distant bearish scenario, I mean right now, in the middle of what looks like a strong bull market. This is one of those moments where everyone is euphoric, but the charts, the Fed, and even XRP's MACD are flashing warning signs. If you hold Bitcoin, you need to watch this entire video, because I'll break down the exact price levels I'm watching, my personal trade plan, and how I'm protecting myself if we get a sudden move down. Here's the deal. Bitcoin just tapped the 114,000 level and rejected hard. That was our first sign of exhaustion. A lot of retail traders got caught buying the top, thinking 120,000 was guaranteed. But if you zoom out, you'll notice that 114K was a major resistance level, going all the way back to the last cycle projections. Right now, the market is consolidating just under that zone. And historically, this is where Bitcoin loves to do a sharp fakeout. The first level that has my attention is 107K. If we break below that with volume, my next support is 104K. And yes, that means a pretty steep crash from where we are right now. Type hold in the comments if you think Bitcoin will bounce before it even gets there. I want to see how many of you are still bullish. Now, before I get into my technical analysis, let's talk about why this setup is different from your typical pullback. The Federal Reserve is playing a huge role here. We just got fresh PCE numbers, and that's the Fed's favorite inflation gauge. PCE came in slightly hotter than expected, which means there's a chance they won't cut rates as quickly as the market was pricing in. If you're new to this, higher rates mean tighter liquidity, which usually puts pressure on risk assets like Bitcoin. So when I say 107K crash incoming, I'm not just being dramatic. There are macroeconomic factors lining up with the charts. Let's break down the technicals step by step so you can see why I'm cautious here. We already talked about the 114K rejection. That's our first key level. Next, 107K is what I call the line in the sand. This is where a lot of leveraged long positions are sitting with their stop losses. If we lose that level, we could get a cascade, a chain reaction where longs get liquidated, price dumps hard, and we hit 104,000 quickly. That's why I'm watching it like a hawk. I personally have a small short position ready to add if we close a daily candle under 107,000. My entry will be just under 107. Stop loss slightly above 108 to protect myself, and take profit near 104,000 where we should find strong demand. This isn't financial advice, of course. I'm just sharing my trade plan. Speaking of demand, I'm also watching XRP very closely because its MACD just crossed bearish on the daily time frame. Now you might be thinking, why does XRP matter for Bitcoin? Well, historically, XRP moves often signal sentiment in the altcoin market. And when alts start to sell off, Bitcoin sometimes follows. The MACD cross suggests momentum is slowing, which aligns perfectly with what I'm seeing on BTC. If you're an XRP holder, let me know in the comments if you think this MACD cross is a fake out or the start of something bigger. Another thing I want you to pay attention to is funding rates. Right now, funding is still positive, meaning traders are paying to stay long. That's usually a sign of excessive bullishness, and when the market gets too one-sided, we often see a shakeout. Imagine the whales pulling the rug just enough to flush out the leveraged longs, grab liquidity, and then send price back up. That's why I'm not perma-bearish. I think this move could be a perfect opportunity to reload for the next leg up. Let's zoom out for a second and remember where we are in the bigger cycle. Bitcoin is still in a macro uptrend. Even a crash to 104K would not break the bull market structure. In fact, it would look very healthy on the weekly chart. This is the part where newer traders panic and sell the bottom, while experienced traders look for entries. If you've been watching my channel for a while, you know I love to scale into positions at key support. That's exactly what I plan to do if we hit 104,000. Before I go deeper, I want to ask you guys, do you think Bitcoin will see 100,000 again this cycle, or do you think this is the top? Drop your answer below. Your comments help me see what the community is thinking and also help more people find this video. Let's talk about timing. The next major economic catalyst is the Fed's upcoming FOMC meeting. If they hint at staying hawkish, that could push Bitcoin right through 107,000. On the flip side, if they sound dovish or suggest rate cuts are coming, we could bounce back to 114,000 and even break higher. That's why I'm not just blindly shorting, I'm reacting to the data. Remember, Trading is a game of probabilities, not certainties. Okay, so what if you're not a trader and you just hold Bitcoin? Here's the simplest plan. Have a strategy. If you're long-term bullish, dips are opportunities. If you're nervous about a crash, you can use stop losses or simply hedge with a small short position like I am. The worst thing you can do is panic sell after a big red candle. That's how people get wrecked. I also want to touch on altcoins because I know a lot of you are watching ETH, SOL, and XRP. If Bitcoin crashes, alts usually crash harder. That's why I like to de-risk my altcoin exposure whenever BTC is near major resistance. Then once Bitcoin stabilizes, I rotate back in. This approach has saved me a lot of pain in past cycles. If you want me to make a separate video breaking down my top altcoin buys for the fourth quarter, smash the like button and let me know in the comments. Now, let's address the elephant in the room. What if I'm completely wrong and Bitcoin just moons from here? It's totally possible. That's why I always use stop losses. If we close above 114,000 with strong volume, I'm out of my short and I'll look to flip long for a run to 120,000 and beyond. You have to be flexible in this market. Sticking stubbornly to one bias is how traders blow accounts. So to summarize my trade plan one more time, entry under 107,000, stop just above 108, take profit near 104,000. If we hold above 107, I stay flat and wait. If we break 114K with conviction, I switch bias and go long. It's that simple. Visual, clean summary graphic of plan. We covered a lot today. The 114,000 rejection, why 107,000 is critical, the 104,000 target, XRP's bearish MACD, PCE data, and its impact on the Fed, and my personal strategy. If you found this breakdown helpful, do me a favor. Share this video with one friend who trades crypto. That's how we grow this community and keep bringing you real crypto news today without the hype. Before you go, I've got another video right here that dives into the next altcoin narrative I'm watching. Click it now so you're ready before the big rotation starts. Because the traders who prepare early are the ones who win big. See you there.